Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. It has already been an eventful morning. I came and sat down at my desk this morning, and Gmail was down, and YouTube was down, and the whole G Suite was down, and nothing was working. It appears like services are back online now, so if we have any glitches today, I'm preemptively blaming it on YouTube, and it is not our fault, but we seem like we're good to go, seem like we're online. So let's start rolling here. Merger Monday is back. A number of deals announced over the weekend and this morning. So we'll talk about that. We'll talk about the Virgin Galactic. The launch didn't quite go as planned over the weekend. That stock is down this morning. We had Nio Priced their offering, so that's trading right at the offering price, more or less. Our guest is supposed to be Jeff Hirsch from the Stock Traders Almanac, but my email is still down. I don't know if his email is down or not. So if Jeff does not join, I'll give him a pass because Gmail is being very, very funky this morning. What is not being funky this morning, though, is the market, or maybe it is, Joel. How are we doing?
Good morning, Spencer. Good morning, traders. Market is behaving well this morning. Trying to share my screen here, and what do we got going on here? It's not giving me the capability to share my screen. Let's see if it will do it now. There you go. Boy, a tricky market this morning. I was hoping to buy this thing at 6 p.m., but I guess I was late to the party. We had a 13-point higher open, nary a pullback, and now here we up 30 and a quarter handles at, I'll give you the pre-market high, 36.85. Not much resistance in here, folks, until Friday's high. Globex high is up there. So I don't know what to tell you. This is just a buyer's market. We are looking at the December contract, so it's going to take me a few days to get my numbers right. Crude up 51 cents at 47.08. Gold's found a new range, 18 to 1850. That's down 1380 at 1829.60. Silver trying to hold 24. That's up a nickel at 24.04. And Bitcoin, just a quick bounce back here, $1,000 a day, up $1,175 at 19,195. Triple D, I mean, is this just people just gearing up, getting excited for the quad witch on Friday? But
I mean, you got Pfizer vaccine. It's the most simplistic market that I've ever traded. I'm going to say it again. It's like nothing is priced in. Okay, we get a Pfizer vaccine approval. Let's rally all the airlines, the Pfizer vaccine approval. I mean, we talked about this a couple of days ago. And obviously, with the advisory committee recommending it, and they were getting a lift off of it. Now they get that same lift. It's the market that prices in nothing. Just simply, basic logic is winning the day. That, okay, the Pfizer vaccine probably going to get approved on the weekend, and the market goes up on that news. I mean, you used to see like, oh, it's all priced in, and nothing's priced in. So it's a very simplistic market. And I guess that's where you got to trade it. Just anticipate where that next headline is. The Pfizer vaccine was an easy one to anticipate. We can anticipate, if we're just saying simplistically, that Tesla's probably going to start to show some strength this week because it's going in the S&P at the end of the week, and it's up 9 points here this morning. Again, that's overall market effects helping it as well. But am I going to short Tesla right now into this? Probably not, because the simplistic trade is working. And simplistically, you'd think it's going to show some strength this week, relative strength at least. So that's how I'm approaching this market. Simple Simon.
Okay. Very light earnings week until later in the week, so we won't be discussing that. Not sure if the analysts are getting ready for, well, I would say vacations. I've been thinking about taking a vacation, but I don't know where to go. I don't, there's really, I don't know. I'm not hopping on a plane quite yet, but analysts are quiet. But we're getting some M&As in here before the end of the year. I don't think the next administration is going to frown upon M&As. But do you want to start there, Spencer?
Yeah, this is no small deal. So Alexion Pharmaceuticals, ticker is ALXN. That's one of your big gainers of the morning. That is getting at least an offer from AstraZeneca is going to buy the company for $39 billion. It's a cash and stock deal. So the numbers are $60 per share in cash plus, and then the ratio is 2.1243. Again, that's
I gotta get my ARB sheet.
Two
If I can
point
find it here in the mess of my desk.
Okay,
Okay.
2.1243 shares of
Whoa,
AstraZeneca.
slow down. 2.1243.
Yep, 2.1243 shares of AstraZeneca, plus the $60 a share in cash. That's what this deal, and that comes out to $39 billion.
So all you need to know for your risk arbs, because sometimes people get confused when there's a cash component, you just ignore the cash component and go with the ratio. So after, obviously, we're pricing it all in today, but once the risk arbs settles down the next couple days, what should happen is that ALXN will move up $2.12 for every dollar that AstraZeneca moves. So if you're going to trade that deal after today, again, because we know it's all pricing in, that's why you see, all of a sudden the big move today. But when the dust settles here, that's how it's going to move. So I love trading the deals. There's opportunities trading the deals. I made money for it for 20 years trading these deals. But again, you're going in there picking up nickels and dimes. So a lot of people want to make 10, 20, 30% of their money. You're not going to do that unless you were long Alexion overnight. What
Dennis,
about
how do they treat you? Just real quick, how do they treat you on margin on that?
What do you mean?
Do you have on both sides, like if you're taking the positions home overnight?
Yeah, I mean, if you're in a retail account, again, I'm in a prop account,
Okay,
so it's completely different. I'm in a completely different situation at Bright Trading here. I'm using proprietary money, so margin isn't as important as what kind of capital you have access to. And that's a big difference. We don't talk what is a prop trader. I mean, prop traders are using their company's money to trade with. So they provide me capital, and then obviously I get a cut of the profits. And obviously there's different deals, and then we can get into that another time.
No, but they do charge you long on one and short on the other.
Yeah, I mean, typically in a retail account, for sure, you're using a margin on both sides. So this is why doing this kind of stuff, in a retail account with 50 grand in it, or 20 grand in it, or 10 grand, it's kind of hard to do. So, but I know there's a lot of traders who listen to us out there have big accounts. There's also, you can totally do this on Interactive Brokers, strategies like this. There's also just to understand, the movement, because sometimes you'll see a stock move, and obviously there's risk arbitrage factors in there. I mean, if you're doing a technical setup on Alexion right now, you're wasting your time, because it's just going to move off of AstraZeneca. So technicals are useless on that now. It's now all about just AstraZeneca technicals. So because it will be a leader. Obviously, AstraZeneca is going to really be your leader because it trades over in Europe and starts trading at 3 o'clock in the morning. So it's already priced in. So after today, I would just look at charts on AstraZeneca. I wouldn't even look at a chart on Alexion anymore.
All right. Full disclosure, I have a very small long-term position in AstraZeneca.
Well, you're getting hit here this morning because they paid a big premium. We know what happens to the acquirers when they pay a big premium and it's an all-stock deal. The risk arbs come and slam it down, and they're knocking it down 5.6%. And again, I'd like to say this would bounce right back, but this is trading over in Europe. It's already priced in. It's been trading for 5 hours. It's got a 1 cent market here right now, so it's kind of where it wants to be. With that being said, we can do technicals on AstraZeneca, and I would say the $50 level is very important for A Zebra N.
Yeah, I mean, they're hitting it because, I mean, it's a decent sized deal here. Let me go to the chart. It's hitting 50 a couple times. This one just didn't get the pops off. It's vaccine news. I know they had to delay a trial. You haven't even got to 50 yet in the pre-market. Not only does that look like a good level on the dailies, but it looks good on the monthlies as well, as you had your October and November low there. Trying to recover, like you said, most of the move is already priced in, so won't get a lot of movement. I see some short-term resistance just under 51.50.
And then we have
more deals.
We have a bidding war. Yeah, it's not so much a done deal, not as much as the AstraZeneca Alexion thing, but we've got a bidding war here in EIDX. There was already an offer that's IDOS. There was already an offer on the table at 73 and a quarter from BBIO, and if you pull up a daily, you'll see that big gap up from October 5th. That's when that headline came out, and then reports of more suitors in play. And then we got it over the weekend. GlaxoSmithKline, GSK, has made an offer of $120 per share.
And for who's the one in play?
EIDX is in play here. So we've got a bidding war for EIDX between GlaxoSmithKline and
that stock has just been running and running. I guess everybody wants this, and this is priced in a bidding war. It looks like before the bidding war even started, this thing has just been a monster stock. It's $116 here in the or actually after hours is $116. Has not traded here this morning. Is it open? I didn't know if it's halted or no. It is open, so there's no action on it. There's been no bids, no offers, no action. So not too many people looking at this, but you can't argue with the chart. You can't argue with, if it's in play. Stocks are in play. I always say technicals go away because if a deal comes on the table, it could go off anywhere.
Yeah,
so.
I don't know. Yeah, with this one, that's one time. Usually, I like to say you get that initial pop, you get that initial surge, and that's it. But when things, go into play like this one,
yeah,
wow, what a move. Okay, well, keep your eye on the tape on that one.
And then last one, quick. This one's quick. Smaller. Well, I guess not small, but a bank deal, regional bank deal. Huntington is merging with TCF, so HBAN and TCF.
Do we have a ratio on that one?
Yeah, it's a $22 billion deal. The ratio I had
all stock.
Yeah, I had it, and then I lost it.
I like this. I'm getting all these new risk arb plays.
What do you think? What do you think? The end of the year like this? They're just trying to put their money to work, or they're
Jason made a good point. He tweeted out last night that actually the CEO of HBAN talked at a TCF conference 2 months ago. I wonder if they started talking at that conference in the D. You wonder if that's where the smoke started, where they started talking.
Yep, couple. Well, I'm sure they're in other places in Michigan, but those are two local banks.
Yeah, so looks like that's where they maybe started talking. It's interesting when you look back and you say, Jason digging there and saying, hey, he spoke at a conference.
Maybe we should dust off Tim Melvin. And
you know why? Yeah, when you talk to these smaller banks. Spencer's still digging for that ratio. I don't know if he's
I know. I'm looking in the press release and I actually don't even see it. So I don't know if
well, we'll find that out for you and we'll get back to it. So I'm probably the only person interested in it anyways. People all want to talk these high flyers. We haven't talked to high flyers yet today. We probably should move on to those. One high flyer that did not fly high over the weekend. Look at how I segue this, Spencer. Is gonna be Virgin Galactic, and you gotta talk to me. What happened?
Okay, so it was a success in that nothing blew up, right? And
doesn't sound that successful. Okay,
everyone is fine and safe. It was nothing like that. But the objective of the test flight was to get to space, and they didn't get to space. So as soon as the ship, as soon as it was released from the mothership or whatever you want to call that, the launch sequence I guess failed to start. So they're like, all right, we're going back down. So
it's never good when your space stock fails to go to space. So anyways, that's why it's down 16% here this morning. I still think the story is here. I love this story. There's going to be more test flights. There's going to be successful test flights. Think about the headlines in 2021 for space. We were talking about on Friday about anticipating headlines. There's going to probably there could be some negative ones like this one here, and maybe they just fail and they can't figure it out. But I will tell you, Branson's a pretty smart guy. He will figure this out, and he has a lot of smart engineers on this. I think eventually they will get to space. I think eventually they will fly people into space. I think eventually it's going to be a storied stock in 2021. So I would be so inclined to buy the dip on this. I think $25.
Well, remember,
look where it got down to. It got down to 23. I wish I would have been out there.
He's supposed to go to space the end of Q1.
Yeah, we hope it doesn't. We hope his flight's okay, because if something happened to him, then that's problems. So I like the story. I'm kind of ticked off of myself because I was in this. I said I was going to put this. I was in this. I said I was going to put in the long-term portfolio and forget about it. And I watched it go from 15 to 23, 24, and then it came all the way back down to 16, and then gave back up to 22. And I was like, you know what? I watched my gain go away once. I'm not going to watch it go away again. And I sold it. And obviously that was this terrible timing, and it continued to run since then. So I think I sold out at 22 or 23. I'm getting it close to back, obviously to where it was, where I sold it. I kind of want my shares back because I do think the stock can be there. Obviously cannot look at, the valuation or anything like that. They don't have revenue, but it's about the story. We talk about that all the time. Could the story get hot in 2021? I think it can. I think I want to own this one in 2021. So I am looking at this dip to buy. I don't know if I'm striking today or I'm going to wait for the dust to settle, but I might start nibbling today on some SPCE.
Go right ahead.
See what happens. You
Yeah.
don't want a piece of it. You're not a believer in space.
You couldn't pay me $350,000 to go.
I would do it if it wasn't 350 grand. Is that how much it is for a ticket?
Yeah, that's what it was before.
Grand?
Yeah. Yep.
Maybe they got like coupon day or something, for,
a Groupon.
A Groupon. I want a Groupon for space, it's for flying Virgin Galactic.
Wait, can I jump in real fast? There was a headline from Bloomberg that just came across the tape that said tech giants are going to face EU fines as high as 10% of their annual revenue. So
that's what hit that. Yeah, I was going to say that, but I saw the market going down, but I'm always an alarmist, and I didn't want to say, this will go, the spoons went down 4 points. What are you freaking out about?
Yeah.
I kind of felt the headline, but I'm like, I'm not going to say anything, hardly anything.
So we got, if we just look at the giants here, Apple just turned red. We have Google is seriously red, but Google might have been red a little bit with the YouTube problems here this morning. I didn't look at Google this morning, so I'm not sure about that, but Google's down $9 here now, so that's significant. Was there any other specific companies mentioned in it? I'm looking at Facebook down $2.
How in the hell can they just come out and say that they're going to do that?
You can say whatever they want.
They're pretty heavy on the regulation over there, much more so than the US, and so they've been talking about it. And Amazon too. They've been talking about this for years. It seems.
How about if we pull PMP off any European country and we'll counterattack with that?
I'm sure that would help.
I mean, trading these headlines on these things is difficult. I'd say great support in Apple at 120. I don't know if you're going to get there. Look at that range, 120 to 125. And then I'm going back to August, that closed the day before the split. That I believe that was 124.40. So that's a major area. Google's trading down. I mean, these things, even if it does happen, it's going to take a long time. Google looks kind of tired. That's hanging out. That's down 827.
It's had a good run.
Yeah.
It's been running for a while. I still, I've been long Google forever. I've obviously said on this show multiple times, I think it's going to be the most valuable company in the world, but they're all there. I mean, Amazon, Google. It's hard to, take one over the other. I would argue that the Amazon chart looks tired. I'm long all of these stocks. I plan on staying long all of these stocks, but I will tell you the one chart that actually does look tired is Amazon. Amazon technicals don't look great. I still think the stock's a story stock. I still think it's Amazon. I still think eventually it's going to 5,000, but it looks like I could cool off here a bit. If I wasn't long Amazon for long term, I'd probably sell it and then try to re-get it. But I always knows what happens when I go my long-term portfolio and I sell stock. I think I'm going to get it cheaper. Then it blasts off and I miss it. And then I don't rebuy it. And then I'm mad at myself 2 years later. So try not to do that with the Amazon. But as right now, that Amazon chart looks tired to me.
Yeah, look at all those lows that you've had just below 3,100. And when it came down there in early October, it bounced right up, right, to 3,200. And now you're coming down here again, and you're not bouncing right up. And that, when you hang out support for too long, you tend to take it out.
Yep.
So I would just use yesterday's low as as a parameter on the downside. And then, I don't know, are we going to get under 3,000? I mean, I think they'd really have to hit the market on this one. I don't think this headline's going to do it. It possibly could, but I mean, it's had a great run this year. Maybe this one might
still
be
up
a little
13 points here this morning, so they're not even hitting it here this morning. It just overall, I mean, look at the weeklies. It looks a little bit exhausted. It's
look at the monthlies. Look at the monthlies too, down here in the bottom right corner. Yeah.
You need to hold that whole 3,000 psychological level. And then maybe we dip below it and shake a few people out again. I mean, we know if we get down below 3,000, we could hit some stops. So maybe this is one of those undercut and rally type trades, that we always talk with Gil Morales about. He loves the undercut and rally. I mean, maybe get under 3,000, hit a few stops under there, and then maybe, it pops back up and then you strike. But right now, I'd lay off. If I'm long Amazon, I'm staying long Amazon. But if I wasn't in it, I'd lay off right now.
Facebook keeps getting hit. This is just another thing on them, but they're still way off Friday. Not way off, but you're still off Friday's low. That was down near 270. So 270 is your number in Facebook. So we'll see what happens with the European Union. SPOO's just kind of shrugged. I mean, they bounced They hit it 5 points, bounced back 2 or 3. So just a headline.
So
Joel, Dean says great call on your Salesforce levels the other week. So he appreciated that.
Let me see. What,
where is it? It bounced to fill that gap you're talking about. It's Hoya's 220 trying to hold, but hanging out here too long. I'm long Salesforce. I bought half the piece. I'd buy the other half. It got down to 200. It's been hanging out here too long in this 220, so that's concerning. But I support until it's broken. So as long as it's above 220, I can't. Those 3 lows. That's a great, 1, 2, 3, like boom, 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 all right there. So your support is clearly defined in here, below 220, and then you're going to test the low. Obviously, from 3 days ago, 215, and then it gets dicey all the way down to 200. So bulls, you need to hold 220 to stay in charge.
And this is just my way of looking technical analysis, is that you have the 4 lows at the 220. If it happens to get through there, I mean, we're trading over 323. I don't know if I would hold out for that low of the move, because I think enough people are, loaded up there that want it. I think if it takes that out, we'll have no problem. Yeah, hit some stops, and then that low at 1563 of the gap. But and also 230, man. Someone wants to sell this stock at 230, so keep an eye on that for resistance. And also, if you're trading, Slack, there you go. There's going to be your primary mover. Someone said Rockets moving here into pre-market.
I had a good day last week there on Wednesday or Thursday. It popped up, and now it's starting to show some life here again. I saw some people tweeting out the technicals. I actually did retweet one gentleman there on the technicals there. He was saying this is ready to break out. I was saying it's about time. We have been waiting this thing. I feel like, this has been like when I said I looked at my long-term portfolio, and there's not a lot of stocks that I'm down in, and it's not that I'm a genius trader. It's just that everything has been going straight up in my long-term portfolio, because I don't actively trade my long-term portfolio. I stuck the rocket in there. It's one of the only losers. So I think eventually it does come back. That's why I'm sticking with it, but I'm not holding my breath here, because this stock has just been a perennial underperformer, and every time it seems to pop up, it just finds more sellers. I've obviously bought this way too high at $24. I don't know what to say. It pops up and you got overhead supply, so it's tough to just go. I don't think this is one that's going to blast off 25, 28, 30 unless some story comes out or it gets behind it or something. I just can't see, unless maybe Kramer starts getting behind it, but he's kind of lukewarm here too now. He did. He had the Kramer pop in this back in August. And when you saw those 3 big candles, that was Kramer, like Jim Kramer, moving stocks like nobody's business. And he's lukewarm to it. So he stays lukewarm on this. It's tough to get bullish.
Remember that trend line I drew on Lyft a long time ago? Remember? It was over a longer. I wonder if I kept it on here.
That Lyft stock. Holy mackerel.
Yeah, remember that?
Yeah, I remember you drew it and you're like, it's just starting to cut through. And look, it's still on there.
It did in one day. It gapped up in one day. An old chicken Joel didn't go. It gapped up on this day right through it.
Classic reopening play too, though. I mean, very, we'd say Uber's got the Uber Eats. Lyft was all in on reopening. So it's not surprising that this stock went up substantially in November when all the other reopening stocks really blasted off. All Pfizer vaccine came out that Monday, and the stock has never looked back since. I think we've had an earnings, or we've had some individual company news in there, but this has been lifted by the Pfizer vaccine, no doubt about it.
All right, S&P still up. Nice gain this morning. Up 27 handles. No daily swing trader. I never bought it. It gapped and going, and I wasn't on. I didn't chase it. That's probably, if I have to identify my worst trait in the markets, it's not chasing stocks that have gaps up like that. For some reason, I think every gap in the
gap and go. It's been the year of the gap and go. So if you've been chasing up gaps, you've actually been doing pretty good. I mean, my buddy Chris, I used to trade with at Bright, and he gets on these earnings, and when they gap up like that, he starts getting options heavy, and he's a big believer in the gap and go. And I think he had a pretty good year here too. So there is money to be made trading these gap and goes. And what we mean by that is stock earnings come out, they gap up. Like Upwork would be one of his classic examples, where you get the big gap up, and then it holds it. It tried a couple of times to take out the lows of the move, but it did not want to take out the 25, and then eventually it starts to run again. So it's almost like it gaps up. Give it a couple of days, let it test it. But if it holds and keeps holding for a couple of days, that's telling you that gap might not fill. There's a lot of traders believe that all gaps fill. Not the case. Definitely not the case in Upwork, and definitely not the case, that it always happens.
What
Some
about
cases
pins?
they eventually come back down. Pardon me?
Pin interest.
Did it do the same thing?
Yeah,
Gap
that
and go?
one. It gap. It went.
Oh, it did fill it eventually, though.
No, not the main
Not the
one.
little one.
No,
But the big one, the big gap up, it eventually did. So when
and you
it
know
went,
why
wow,
also that's a
68
viable.
down to 52.
You know why also that's a viable strategy?
Yeah, why?
You're out.
Yeah, I know. It's well defined. You're using that gap and it starts to get into there. I mean, in the case of Pinterest, I guess you'd been stopped out when it started filling that gap, and it would have been the undercut and rally where, Gil Morales been buying your stock from you. But there's
45 to 50. What was that, the actual earnings, or was there something? Because there's two major gaps.
No, I think the earnings were the 50 to the 67 gap on Pinterest.
And what was
I don't
the
know
45?
what that other one was. I don't know.
Spencer,
Maybe it was
could you check
guidance.
that?
It was guidance ahead of the earnings.
What was the date?
The date was
Really?
the 21st, October 21st.
Perhaps the night of the 20th, morning of the 21st, probably the night. Pinterest comes out with their news at night, probably on the 20th, unless it was an individual, macro catalyst that gapped it up that day.
Yeah, it happened because it gapped up on the
Was that
20th.
Snapchat?
No, that was
Snapchat.
No. That was
Yeah.
It might have been.
That was the Snapchat earnings, I think. When Twitter gapped up, Pinterest gapped up, I feel like that was Snapchat day.
All right, Spencer, what do you think?
I think maybe you could be right.
I think it was Snap. I remember Snap had the big gap up, and then Pins and Twitter, because they trade off of it, started really running.
Yeah, you're right. Yeah, and then
I think that was Snapchat earnings.
Also, that same day, Pinterest got up like several upgrades. But you're right, it was they got a Goldman upgrade that day, but it was also the Snapchat.
The Snapchat earnings. And those three stocks, I pair those up, and they've paired well. Obviously, Twitter went the opposite way on earnings, but when you have earnings, you can't be pairing those things. Just when the absence of news, those three stocks do tend to trade together to a certain extent. So Pinterest.
How do you
Twitter,
trade them? You do arbitrage? You just buy all three?
Yeah, some short one, long the other. I trade those. Don Bright used to call it the Piston strategy. When you got more than two pairs going on, he'd have like four. He'd do it with the own. So stocks going up like down. You got the Pistons, right? You could say Detroit too. It's a good analogy for it. But I think he coined that, the Piston trading strategy, where you're trading 4 or 5 stocks all in a group, and as one comes down, you're buying that one, and one goes up, you're shorting that one, and you're just saying that eventually they're going to come back up, those pistons, and then when they come back in line, you get out, and then it shoots the other way, and then you short the one and buy the other. So the stocks that are all relationship based, you're always fading. It's just a basic fade trade, but he called it the Piston trade. Don Bright, rest in peace. Awesome strategies, taught me so much over his years.
All right. Okay. Let's Spencer, you're manning the wheel here. What else you got for us?
Well, we'll have Jeff Hirsch on in about 5 or 6 minutes. Dennis, you mentioned Tesla at the top of the show. Did you trade the S&P announcement on Friday?
No. You mean the AIV throwing it out?
Yeah, so AIV's out, and they also announced Tesla's joining the S&P 100, and then Oxy's out.
Yeah, and I was like, I saw AIV hit my filter, and I'm asking my buddy, I'm like, what's going on with AIV? And then I see the headline, I was like, oh, that's going on with AIV. So it's the one getting the boot. So no, I did not trade. The S&P ads, there is an algorithm that is all over S&P ads and S&P deletes. And from the smaller ones, the bigger ones, that algorithm is operating in the millisecond time frame. It's hard to beat. Sometimes it can be wrong and it can overshoot. And in some cases, I've actually cited those examples where you'll have a stock
Oxy
added to the S&P and it goes down because it was a bigger component in the S&P index that it's coming out of. That is not the case in Tesla. It's going to be a huge component in obviously the S&P 500. So the net effect to buy is there. So it's all about arbitrage effects. But anyways, no, I did not trade IOV.
Oxy's up. Accidental petroleum. Yeah.
So it's staying in the 500, but it's out of the 100.
Okay.
Tesla will be in there because we talked about that last week. All right, 8:30 here. Let's talk Nio here for a second. They announced their offering last week, but they didn't price it. They priced it this morning, 68 million share offering at $39 per share.
I mean, we talked about this on Friday when the stock was trading $43. I actually wish I would have shorted it, but we warned everybody on this show that if this offering price comes out, this stock's going to go lower yet. So I don't want to be long this stock until I know what the offering price is. So the people who heeded the advice hopefully didn't buy it. And obviously we don't give investment advice, but I was saying I would lay off if it was me, on my opinion. And obviously proven correct here once again, because they price this thing below. That's typically what they do. So you usually want to wait until you got the offering price. We got that Nio now. So now that 39 level becomes like a floor for it. Obviously the EV trade comes off again for now.
Yep.
And it's a big level too, because it kind of coincides nicely with the February 2nd low of 38.43. So I have technicals backing it up too. So 39 is huge now. Does it bounce off that level? Well, it did perfectly this morning, and the person selling at 39 isn't reading technicals either, because we talk about, or listening to the show, because we talk about that offering price being, you know, a potential floor, and it bounced right off of there this morning.
Yeah, it did. And Barron's came out on these stocks. I didn't read the whole article. I was kind of watching a Michigan basketball game and reading Barron's, and but there was some negativity on these stocks and a few other ones. What are these XPNG?
Well, XPEV coincidentally here has had a buy rating. I believe it might even be an upgrade here this morning. There is some analyst action on it. Who's the analyst that got down dirty XPEV, Spencer? Throwing under the bus?
I didn't actually see that one.
I got it. I find it here. 1 second.
They're so lightly covered that like one even if it's a small shop.
It's not a small shop. It's a big tier, and it's Deutsche Bank. They started at a buy here this morning, and they see multiple winners in new EV world order. I'm just reading the note here right now. They put a price target of $58 on it. The analyst comments are: we introduced the Fab 4, Nio, Xpeng, LI, Auto, and WM Motor in September. I believe these upstarts represented an emerging class of automakers backed by large, well-capitalized tech titans and ambitious local governments looking to disrupt the auto industry. I mean, okay, and then it goes on and on and on. But they are bullish here this morning. Deutsche Bank is a big gun. They obviously have a lot of influence here, and that is why XPEV is not ignoring Nio this morning and is going up, because Deutsche Bank is getting bullish.
You all know what I'm going to do on this one. I mean, a big old move like that, they're rescuing it at 42.45. You had your high over $70, 58.50 to 60. I mean, get up there, palms out. I'll see what happens there. I'm not going to.
Yeah, but we're at 58. We're at 45 right now. Is there a trade here along? I think there is.
Yeah, leaning on that low. Yep.
Leaning on the low.
Yep.
I would lean on the low, the 42.84. You got an analyst behind here this morning. I would not be fading this up move. It might, you know, and these things it's a wild stock. So anything can happen. But, you know, other things being equal, when I see a stock that's had the shit kicked out of it, for lack of a better word. And
hey,
it really
Raz,
has.
how you doing there?
I know. I had to throw it out there. Raz said it's okay. But $74 and SHIT isn't really that bad a word, although don't say it in front of my kids, and I hope they're not. $74.49 down to $42 is an SHIT kicking.
Yes.
So it needed somebody to come to the defense of it. It got that this morning. Would I have liked it to have been Goldman Sachs? Sure. But Deutsche Bank is influential as well. They are major overseas, obviously. This is a Chinese company here. Where is XPV? Is it China?
Yes.
Yeah. So, I mean, they're covered over there. I think you look at pullbacks here. Maybe, I don't know, at 46, does this thing have a potential to go to 50? Yeah, I kind of like it. I kind of like it even at 46, even tracing it a little bit here. But again, leaning on the low of the move. And I like the way Joel's lined this up here. He's looking at the potential to a 58 trade. I don't know if it's got that much gas in it, but I think it's got room to 50. So I could get on the bandwagon. Again, all these stocks move together. So if you start seeing the EV trade come off, this will come off. This is one of the leaders. It's not great that Nio is down here today, but who knows? Nio could bounce off that 39 and hold up. So we got to watch what Nio does too. If Nio starts taking out 39, it will drag XPEV down with it. But as of right now, Nio's holding up okay considering the offering. So I kind of like the call here from Deutsche Bank.
All right. 8:35. I want to bring on our guest here, Jeff Hirsch. He's the editor-in-chief of the Stock Traders Almanac. Joining us now, Jeff. Good morning.
Good morning. Videos failed to start.
Videos fail. You know, it's okay. We'll blame it on Google.
Windows is messing with me today.
Google's having all sorts of problems. We'll just blame it on Google.
I know. My kids were almost not having school today. They were very excited.
Oh, that would be a way to get out of school.
This beats the old fire drill trick, you know, the old fire alarm trick. which you got in trouble. I never did it, but some people did.
You could unplug the mom and
Bet
dad.
Joel
We
did
don't
that.
have school today, and you could just unplug the router.
I mean, you think some smart hacker kids would figure this out already?
Oh my Lord! And I also was talking with my buddy that teaches up in Maine.
Mhm.
So much for snow days.
Right.
That's
I've
terrible.
always been concerned about the dependency the schools are giving, relying on Google for this. I just, something like this is bound to happen. And being a Microsoft Word and Excel kind of guy, like it just, I can't stand having everything just constantly floating and changing in Google Classrooms. It's very complicated, very difficult as a parent to keep track of stuff in there. I'm not sure it's the best way.
All right, Jeff. So when
Anyway,
when I invited you on the show, I'm like, man, you're gonna have a tough year writing the Almanac this year. I mean, I don't know where you had a pandemic chapter or what we've had experience in 2020, and you gave me an interesting response. Why don't you share that with our listening audience?
oh my God, why don't you remind me what it was? Because I don't remember what I said off the cuff. I mean, it was probably something to the effect like we've seen this stuff before. There have been, major issues. The Almanac does have data that goes back before the 1918 pandemic, but we've been through wars. We've been through major, cultural, social, economic shifting events. So there's not a huge data set of these things, but it's not unheard of. It's something that was definitely a shocker to all of us when it hit. March 16th, 23rd in that area was a rough patch. But we've seen those kinds of corrections before. We've seen oil embargoes and all sorts of things really hurt the economy, or at least hurt the market. But it's something that the market, I think, has moved past. I've been noting in my commentary the return of seasonality starting around September. I got a chart. I don't know if you want to go to my website or whatever. There's a chart there, the S&P, where I highlight. I don't think I can do my video still. No, it's not working. Maybe I can share that. Let's see. Here, am I screen sharing up there?
I'm looking for it, but Jeff, you can also share your screen and pull it up.
Is it sharing?
Yes, it is.
You see something?
Yeah,
All
we
right,
got you.
so let's jump to this chart right here. My little arrows and lines here. This is from the end of November when we did our December outlook.
Hey Jeff, can you just zoom in on that a little bit?
Oh,
just like Command Plus a few times. There you go.
Were you on a Mac?
Perfect.
Better, much better.
Are you on a Mac? Command Plus?
Okay, Control Plus, Command Plus. Give me a break.
It's Control mouse wheel.
Control Alt Delete.
That's my favorite.
Reboot.
That doesn't work so much anymore. But as you can see, more typical downward September action, end of October, big November move after the election. So up until then, after the big low in March, and you got to realize that the scale on the right side is for 2020 because the amplitude of the moves this year was so much greater than the averages. But you can see the separation here in the summer where seasonality, that usual worst 6 months, worst 4 month stuff was just not happening at all. Everyone was, getting back after the big bear market correction there. So just a little reminder, seasonality's back in style. I mean, if you think about what we've had here in early December, we've had a little weaker patch, kind of the beginning of tax loss selling, or not the beginning, the beginning of the end of tax loss selling. And we're seeing a setup for a mid-December move, especially small caps. I mean, there's a couple of trades that if you want me to jump around, I know you guys are much more trader oriented than myself per se, but here's a copper trade, the seasonal copper trade. We like the ETF there, the JJC is a way to trade that. You can see this move where copper tends to bottom at the construction sort of lull. Maybe we'll get a boost from the economy opening up again with the vaccines going out there. So there's a a little copper trade. Also, the CPER, excuse me, is an opportunity there. We put out an oil and gas trade, oil coming into season here. This is the XLE, not the USO type of trade for us. The actual stocks, the Exxons, and Chevrons and such. Pardon me.
I just want to be clear. We're on your site, stocktradersalmanac.com right now, correct?
Yeah, this is paid. Yep. This is paid for content that I'm scrolling you through.
Yeah, we get that free stuff.
This is your free trial.
Inside luck.
Newsletter. This is what we put out to our subscribers, so you get a quick look at that. I mean, again, if anybody wants to come and check out the site, they can. I'm logged in as my partner right now, the admin. But you could, there's a free. If I log out, you go here and you hit the free trial thing. You can go in.
So Jeff, you kind of already answered my question, which was, what are you seeing as far as like conventional seasonality? If it went if seasonality went out the window in the spring and summer, but you're seeing it come back a little bit.
Most definitely, I'm seeing it. Intra-month overall since September, we're seeing this early week December action, beginning of the month. After the first few days, very typical. It's encouraging. It was definitely off kilter from February through August.
So then, I'm sorry. As far as January, you're anticipating a typical January effect.
Well, let's define January effect.
Great point.
The January effect is historically known as the small cap effect, where small caps outperform large caps in the month of January. That actually is more of a mid-December effect these days. We've seen that shift, which is featured in the Almanac, where small caps like the Russell 2000, even though they're kind of more mid caps these days, will outperform the S&P or the big caps for the last 2 weeks of December and then in the first couple of weeks of January. The January barometer, the creation, one of the foundations of the Almanac created by Yale Hirsch, who is 97, who I saw a few weeks ago. Essential care visits are back on, so I got to go in there, get a rapid test, and go see the old guy. But January barometer is as the S&P goes in January, so goes the year. That's taken a couple of hits recently. Still historically a stronger indicator of what's ahead for the year to come. We've even built on it, standing on Yale's shoulders, by combining our Santa Claus rally, and that's not just any rally, from Halloween through March, which people tend to throw around out there, or a December rally. It's the last 5 trading days of the year and the first 2 of the new year. Another one of Yale's creations in 72. And his famous line, if Santa Claus should fail to call, bears may come to Broad and Wall. So we see a usual rally around the last few days, 5 days here, first couple of New Year's, 1.5% or so S&P. And when it doesn't appear, it's usually a sign you're going to have lower prices or a correction or a flat year. Last 6 times have been that. 08 and 2000 were perfect examples, as well as 2016. We had that little bear, ended in February. And then we have the first 5 trading days of January early warning systems. We put all 3 of those together for what we call the January indicator trifecta. Layering a few indicators together gives you a little more strength, a little more accuracy going forward. But in general, since we're talking about January seasonality, we've seen profit taking pick up more in January. January's weakened in the last couple of decades. I know you guys are traders. You ever heard of the January break in the S&P pits?
No. Tell me about it.
An old profit-taking trade. My buddy, I guess Danny Riley, Mr. Top Step down there.
Oh yeah.
Got to go visit Danny down at Delray again soon. But he's one of the guys that would talk about that a little bit. It's an old pit trader seasonality or trend or pattern to look out for, and I think that's come home to roost a bit more in recent years, where January, used to be a pretty straight bullish month, part of the best 3 months, November, December, January. We have seen more weakness in the broad market, U.S. stocks in January. So we'll probably get a year-end rally, and then, a look for a little bit of a soft patch in the middle of January again. But I still think the best 6 months will have some strength. There's a chart in the new Almanac about, post-election years with incumbent wins and losses. And then I put together something that's out there showing, new Democrats, admittedly small database, small statistical data set with like 4 in the last, I do a lot of this stuff since 49 because the world changed after World War II and after that first bear market. So from 49 through 2019, there was 4 new Democrats coming in after beating the Republicans and 4 new Republicans. And those 4 new Democrats, not including Jimmy Carter, did quite well. So remember Carter's first year was kind of rough. But new Democrats with Clinton and Obama, and I guess, who was the other one? I got to look at my book. I'm drawing a blank. I guess Kennedy, since we go back that far. Yeah. Their first years as, first year were pretty strong. So, that's a positive for next year. And, you got to look at the fundamentals out there. We don't just look at seasonals. We're looking at tacticals, like you guys do a lot of, and the underlying, forces out there with the pandemic and the vaccines. And, I got friends that are in the bar and restaurant business, and they're having trouble around here in the New York area, and seeing New York City shut indoor dining.
They did. Yeah,
is not good for those people. And they're, those are their livelihoods. So that's,
I'm going to throw you a curveball here, Jeff. You ready?
Oh,
You throwing anything in there about Bitcoin?
me? I have not gotten my hand around Bitcoin. I know it's something that people are working on. I think there's something to say about blockchain going forward, keeping track of things, but it's not something I'm tracking right now. I know some other friends in the business that are coming out with new Bitcoin tradable products down the line, but I'm not able to really get my hands around it.
It's not going to make it. And then I was looking at your site now. The Almanac, you can purchase that besides being a subscriber, correct?
Yes.
Okay.
Is that out? Is that out for next year?
Our publisher had some issues, and it's just supposedly coming to I think they're shipping it out this week to us. It's in their warehouse, so it's out, but it's late, and I'm not happy about it. But what are you going to do this year? I'm not sure. It was all COVID related, but it may be. So we'll be sending them out to our subscribers, but hopefully towards the end of this week, if not early next. It comes free with the subscription, but you can go buy the book. I mean, Amazon's taking orders for it. If you buy your books that way, you can reach out to us. We'll sell you one too. But wherever you get your books, you can get them. I was going to mention something else about the stuff I'm looking at. Sentiment's pretty high, pretty exuberant. You guys look at put call ratios at all? You ever? So
yep.
The one I tracked, the one Yale trained me on tracking for years, is the weekly one out of Barron's, the Barron's Lab pages. And back in 2001, when we reformatted our newsletter, I started an Excel spreadsheet database of all of the weekly indicators, which are all, it's from a sheet in the back of the Almanac, the record keeping section, where you keep track of what's going on. We got put, call, high, low, advanced declines, new highs, new lows, that kind of stuff. The 0.39 that Barron's had, I think it was last week, not this current one, the week before, was the lowest number, the lowest put call ratio I have in that database going back to about June 2001, May 2001, when I started tracking it. Pretty decent set of data. I mean, that's 20 some odd years or about 20 years. So that's pretty exuberant. Also,
you look at that as a bearish indicator?
I don't know about bearish, but definitely putting the correction thoughts out there. There's definitely room for a pullback, room to pull up some that kind of. See, these contra indicators, from what I've seen, are much more indicative at extreme, highs or at extreme fear levels. Like when you get up to 1 or near 1.0 on the put call, that's something that's a little bit clearer. They can stay high, just like tops are a process and bottoms are an event. Bullish sentiment, excessive bullish sentiment can be there I mean, look at when Greenspan put out the irrational exuberance. I mean, the market rallied for quite some time after that comment. So it's just something to keep your eye on. It can also work itself off with a little bit of profit taking and selling. And Investors Intelligence Bullish Advisors presents pretty up there too. And the difference between bulls and bears is wide. So, caution with some trading, generally U.S. equities, prone for a little bit of a correction at a minimum.
The irrational exuberance speech was in December of
96.
Right. So it took 4 years, or a little over 3 years for the market to top out. All right, we've been on with Jeff Hirsch. He's editor-in-chief of the Stock Traders Almanac. He got some fans in our chat, Jeff, who say they buy the Almanac every single year. We appreciate your time. Next time we'll have to get you on video, but have a good one and stay safe.
Be well. Thanks, guys.
All right. 8:51. I just want to cover one more before we go to the chat. I want to get to this SWI this morning. This Solarwinds. Looks like this company is at the center of the latest hacking scandal. A bunch of reports over the weekend saw from the Washington Post and others that Russia basically took advantage of a system update in Solarwinds, which is the company and the name of their product, and the entire government and the DoD, all these big companies use this software. So SWI is looks like it was at the center of what Russia was able to hack with just the latest cybersecurity incident between us and another country. So I'm not surprised to see it down this morning. I would expect the company and the stock and the software would get a lot of media play today and in this week, because from what and this is really complicated, but from what it looks like, this company is sort of at the center. Their software was what was vulnerable to this hack.
This level's so well defined, Joel.
Yeah.
I'll take the technicals because this is just a pitch up the middle. Is 19. It bounced off there in the pre-market. If you look back to September, so many lows in that area. I mean, 19 is the level here. That's the level that it obviously needs to hold. I think it holds that. A lot of times you see these headlines, we get a breach in the company's software and they slam it down. And then eventually, 3 months later, people have forgotten about it and the stock's back. So you know what? I would be so inclined. I don't know much about this company. I know it does IT. I know it's an IT management software company. That's all I know about it. But just knowing, that a lot of times you see these hacks and then a couple months later, it's not a major issue unless you're Equifax. SWI 19, I kind of like that level.
Do you know why this stock has been rallying as of late?
No.
The name.
You think the people think it's a solar stock?
Yeah.
It's possible. I mean, you don't know anything about the company.
I didn't know anything about the company, and Spencer
Solar's been hot.
Yeah.
How many people own this thinking it's a solar stock?
I don't know, but now they know that it's not. Or just like a day trading.
So now it's in trouble because we just told everybody it's not a solar stock.
I don't know. We talked about this on the pre-market show, and I'm like, wow, I thought, wow, they're going to hit this, and they did, and now you're coming back. I mean, Dennis talks. You see those kind of level like 19. You see that in the pre-market, and then you got to bounce over 21. Makes you. I mean, we're back here at 1965. But I think it adds, more credibility to that. People are like, "Oh, I missed it," and they're like, "Oh, I'm going to get another shot at 1937."
I can buy a solar stock down 16% this morning.
And real quick, irrational exuberance story. That was back when we were on the oldie desk, and once I heard that term, I loved it, and I did. I kept on repeating it. And there was one guy on the desk for about a year, John. I can't think of what his last name was. Like a year after he said it, someone mentioned, that Greenspan had made the comment, and he goes, "I thought that was Joel's comment." John, if there's any oldie guys in here, he was Opie's assistant. If there's any oldie guys in here, I can't think of what his name was, but that was not mine. S&P's hanging out here right at 36.80.
Let's go to the chat. We got about 5 minutes left in our show. There's a bunch of tickers thrown out. Way too many for us to get to. I don't know. I see Palantir. We talk about that.
Where is Palantir?
Every day. Talk about that stock.
Let's look at the technicals here. I'm
Yeah.
still in it. You know what? It held. I don't like it. It didn't make a new high on the last move. That's somewhat concerning. It needs to get back up over 30, but it's kind of in the middle of nowhere here. This is a curveball at this price. I'm still long it though.
Yeah. I'm surprised you didn't dump that thing the way you.
Well, I went up 30% in 4
I know,
days since I bought the low.
It's so funny. I
missed
look
it
at this
by a
time like,
buck, the low of the move.
Dennis is going to come on the show tomorrow and say he
I know.
sold it.
I put it because I wanted to like hold on to like
yeah,
the story.
like space, right?
Yeah, well then I sell it anyway. So what about Jemiah too? I mean, you know, I'm still long a piece of Jemiah. I'm somewhat concerned that it actually kissed the high back from November 27th, like almost to the T yesterday or on Friday. That's somewhat concerning on the technicals. I wanted to get up over that 41, but I mean, all these story stocks, you're setting up, it's hard to sell stocks right now when, you know, we just had Jeff Hirsch on, but when we're setting up in this seasonality, like you could clearly, you know, the first chart that you looked at, you can clearly see, you know, overall December is usually a very good month for stocks. And we're still only part of the way through it. Is it going to pull the rug out from under us? And is it going to be an ugly month for stocks? I don't think so. I think you have money managers here that are still chasing things. I think you have people anticipating the Santa Claus rally. I think you have just a lot of people who have missed it. And I think there's underneath demand in everything. So maybe it's going to pull the rug out and just, you know, we're not going to, you know, see it coming at us. And that's probably going to be the case. But I'm not that nervous about the market right now. That somewhat makes me nervous, and I'm not any, you know, usually I'm always cautious, but I just feel like I'm holding on here because I feel like stocks are going higher still.
PLTR pair of lows at 25, but you're ways away from that. And there's a couple highs in the same area too. You may want to keep an eye on 2804, 2827. And so kind of a not matching ranges, but keep an eye. Let's see if you can clear, get 2830 and then test that 3-day high, 2865. Jemiah, boom, you mentioned that.
I don't like the double top in place, but it's still got some momentum going here.
Well, there's a level, right?
I know, time,
yep.
41.
Yep. It's not the all-time high yet, though, Dennis, so don't be too worried about that. The all-time high is at 48.
I didn't even realize that. When it first came out, it was higher. I never even went that far.
Actually,
I thought it was making all-time highs. I never went out and looked that far.
Actually, it's even higher than that, 49.77.
I'm sticking with the small piece I have. I've taken up most of my position, though.
All right, Spencer, what else?
What about Inseego here? They're getting a pop on a headline this morning. This is a 5G name, and Vodafone Qatar launched a 5G service using Inseego technology.
Wow,
so
right back up.
Kramer effect too. It's not only that. Kramer had announced that the stock was going to be on Mad Money, and the stock went just berserk. This was Friday. It opened at 13, and he announced that, and it ran to $15. Pulled back, obviously. Now it's $16 here. It's a smaller company. Robinhood could grab a hold of this thing. Full disclosure, I am still long a piece. I've sold some of my stock. I sold some of it into the Kramer pop on Friday because it was a big move fast, but I'm kind of regretting that already because here the thing's trading 16.20 this morning, and maybe there's some fundamental news like you're talking about too, but Kramer's behind this thing now too. So you know what? I don't want to, have targets and stuff. I don't usually, throw targets out on something, but I think this thing could eventually see 20. You've got to get through the highs. The big number here, which we're trying to do today, and it looks like we're going to open as 15.25. So now you're at new highs on the move on this thing. It's a 5G story. Kolb obviously on the desk has been talking about this from a fundamental basis forever, for years. We were all long it just because he kept talking about, you got to own this one. This is going to be the 5G play. And you know what? He got this one right. And I rebought it around $10 there about a month ago. I'd sold it and I rebought it, and it was a good buy. I sold half of it though. I sold half it in the Kramer pop because I was like, that was just too much too fast, I thought. But now it's 16, so I'm regretting the shares I sold.
What's nice about this is that you had 2 monthly highs, and we're going all the way back to 07 and 08. And you had highs at 1673, a high at 1673. That was your high in January of 07. 1680, that was your high in February of 08. These are both 08. And then your pre-market high is right there too. So that's just a good level, potential target. And Longer term, yeah. Why not think about $20 in this one?
I think so. I think
nice
are you still long it? Did you have it, Joel? Did you ever have this one?
I did, and I'm long gone.
What are you still long it, Spencer?
No, I'm long gone. Well, we were all long it, and I think we're all at. I saw
everybody because Cole kept just saying, "Oh, this is the 5G play," so we were all like, "Okay, I'll throw some speculative."
I sold it right before that earnings drop in like April. I sold it right before that.
I originally bought this at $1.50, and that's how much Cole was all over it. Spartan Trader on what's his Twitter handle if you want to follow him. He's actually pretty good in this 5G stuff.
I think that's Spartan. Yeah, Spartan. I think it's his handle, Spartan Trader.
Oh, I'll tell you. I'll tweet him out there and give him some props here today. So if you follow me on Twitter, I'm Triple D Trader. I'll tweet him out and you can give him a follow too. But he's been all over this. This was his play. This was his, fundamental research, and he just kept saying this is going to be the player in 5G. It's going to be one of the small cap players in 5G, which could really, go. And his target was always $10, but I mean the thing's 16 here now, and I think he's still trading it long. So I don't know. The technicals just set up. Robinhood grabs a hold of this thing. Could be 5G is going to be a story in 2021. I kind of want to hold on to the rest of the shares I have, so I think I'm going to stick with it. I think it could go to 20.
A couple people on the Benzinga.com chat noting also that they had the contract with T-Mobile announced last week, where their technology is also available on T-Mobile. So that's obviously a big deal as well.
What's the market cap of this thing? I mean, it's still a really small company.
Couple hundred. I don't know. If I had to guess, top of my head, I would say like 200 million, 300 million. I have no idea though. That's just a guess.
That's really small.
It's 1.3 billion now. So it was a couple $100 million.
All right.
It's actually starting to get some.
Buy it. I would buy it. I would go to the bank right now and get a loan for that for 200 million.
Or you'd buy the company outright if it was only 200 million. Joel
people are asking about this BEP. Is there a
split today?
Oh, it has a split.
I don't know. I don't follow the story close enough, but my software adjusts for everything, and my software is showing me 38.68 at the close. So it's going to be right. That's a reorg, so it's going to probably be correct. So it's actually up 6% here this morning. I don't know if this split 3 for 2. I'm not sure because I don't follow the story. I just saw some people talking that there was a split. I'm assuming that's correct. It's not a perfect split, obviously, because 58. So obviously maybe there was a spinoff. I'm not sure. I don't follow the story, but I can tell you the adjusted close for my software is 38.68. So that's telling me the stock is up 5% today, actually.
All right.
And what about Dropbox? Because this got speculation on Friday that it was a takeover target. I'm not sure where the information maybe is that where
the information came out and said Dropbox and MongoDB are
MongoDB, which is MDB.
Yep.
Both of these stocks continue to blast off here this morning. I know, yes, on Fast Money Friday night, I believe Michael, I don't want to say his name wrong. Michael Cow? Is that how? Michael Cho? Anyways, he's the guy, their options guy. Sorry, Michael, if I said your name. Anyways, so he was speculating too in the options that he was seeing something there. So, I mean, this thing is lifting with the CNBC love too. So it's up here again this morning, 24.10. It's been a dog for a long time. I mean, stocks are in play, technicals go away. I don't know if there's anything to these rumors or if they're just rumors. Obviously, nothing materializes. It may eventually start to leak again. But it's also a sleepy stock that has done nothing. And once these sleepy stocks start to wake up, it's when the Robinhood crowd starts to grab a hold of them. So I wouldn't want to be short it for that reason, but I'm not long it either. No position.
I'll just alert people. It has peeled back. If you were up earlier this morning, you couldn't. No, that's for Friday. Okay. That's after hours action on Friday, folks.
Where did it get to on Friday after hours?
25.57.
Probably because the CNBC featured it.
Right. Yep, and it's right at that time. Yep, 5 o'clock, 1700.
And
good call. Well, just folks on these charts here, just for clarification.
Put a chart up so we can see.
That would
have a chart up. And as you do that, Spinner noting in the Benzinga.com chat that NEWR and BOX were also mentioned as well as Dropbox.
BOX and what was the other one?
NEWR were also mentioned in that.
Okay. That's
Joel, back to your point.
Just the I don't know what's that light blue? Is that what color is that? I'm kind of colorblind.
That's teal, right?
The teal and the purple are after hours.
The purple
and magenta. I don't know what the hell they are. Those are after hours in pre-market. And then as you see over here, once you start to get into the regular session, it's red and green. So just if you're wondering all those different colors, that's thanks to Gary in the chat, who's been helping me with TradeStation. So thank you, Gary.
Magenta or cyan. I don't know. Okay.
Whatever.
Anyway, I'm going to wrap it up here, pulling up our disclaimer so you can see it. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. There's more disclaimer text there. We appreciate our guest today, Jeff Hirsch. Thanks for coming on, Jeff. We appreciate all the comments and questions and everything else in our chats, both on Benzinga.com, on YouTube, and on Benzinga Pro. Catch SPAC Attack at 11 o'clock. Jason and Luke are on at noon. Joel and I are back at 3:40 p.m. Eastern Time. Until then, everyone have a good rest of your day. Stay safe wherever you are, and good luck in your trading.